Hello, everyone, and welcome to today's webinar. We are excited to have you here as we dive into an important topic on how businesses can simplify sales tax with Zoho Books. My name is Prashant, and I'll be your host for this session. As many of you know, this time of the year is very crucial in Canada with tax deadlines approaching, sales tax filings happening, all becoming a priority. Ensuring that your sales tax calculations are accurate and compliant is very much essential to avoid penalties and streamlining your entire financial processes. And that's exactly what we'll be covering today on how Zoho Books can help simplify sales tax for your business with automation, accuracy, and features designed specifically for your Canadian business. Zoho Books continuously evolves to meet the needs of businesses, and our Canada edition has introduced some very exciting features to make tax compliance even easier. In this session, we'll be highlighting these enhancements and show you how they can save you time, effort in managing your tax obligations. Take us through this session, we have Narayana G with us, who's a product expert at Zoho Books, and many of you might already be familiar with him as this is one of our support heroes in the region. Today, he will walk us through how you can streamline your sales tax management efficiently within Zoho Books. Before we get started, let me quickly walk you through the webinar platform. You will see a Q&A section here where you can drop your questions to us at any time. We have Vijay Mohanraj tracking all your questions there, ensuring that they are getting answered properly. And for any chat queries, you can use the chat bubble that's there on the below bar. With that, let's get started. Narayana, over to you.
Thanks for the intro, Prashant. And hello, everyone, and welcome to today's webinar on handling Canadian sales taxes in Zoho Books. I'm Narayana, and I'll be guiding you through how Zoho Books helps businesses stay compliant with Canadian tax regulations, including GST, HST, PST, and QST. So, managing sales taxes can be complex with different tax rates and rules across provinces, but Zoho Books simplifies the process by automating tax calculations, reporting, and filing. In this session, we will walk through the key features, best practices, and common scenarios to ensure your tax handling is accurate and hassle-free. So this is the agenda for the day, and we will cover the following topics. First, we will see what is a federal and provincial tax, and we will see the threshold for registering with the tax authorities, and how we can configure the tax returns in Zoho Books, and how the tax automation comes into play while creating the transactions. And we will see how you can generate the returns and how you can record the payments. And also, we will cover two special topics today on how you can handle the meals and entertainment expense in Zoho Books, and also how you can generate the vendor slips in Zoho Books. First, we will see what is a federal tax and provincial tax in Canada. Canada has a multi-layered sales tax system that includes both the federal and provincial taxes. So these taxes apply to goods and services, but the rates and types of taxes vary depending on the province or territory where a business operates. So some provinces follow a harmonized tax system, while others have special federal and provincial taxes. So understanding these differences is essential for businesses to ensure compliance with Canadian tax regulations and avoid any penalties. So in this session, we will go over how these taxes work and how to handle them effectively in Zoho Books. First, we will see the types of sales taxes in Zoho Books in Canada. And so GST, this is a federal component of 5%, which is applied across Canada. So this tax is reported to the Canada Revenue Agency. The harmonized sales tax, it is a combination of federal and provincial tax applicable in certain provinces like where the GST and PST are merged, and the rate varies by province. So as you can see below, the Ontario region has its own provincial tax, which is ONHST 13%. So this tax comprises of 5% of the federal component GST and 8% of Ontario's provincial taxes. And so these are all the list of provinces where only 15% of HST is paid for the sales. The provincial tax is collected separately in some of the provinces like British Columbia, Manitoba, and Saskatchewan. Quebec province has its own provincial tax, which is QST, and this will be added to the federal component while you do the business in Quebec. So this is the basic introduction about the sales taxes in Canada. And now we will see the threshold of registering the taxes with the tax agency. So if your total sales exceeds 30,000 Canadian dollars in a single calendar quarter or over 4 consecutive quarters, registering for GST HST is mandatory. However, if your revenue is below this threshold, so the registration is optional there. So to handle the complete taxes in Zoho Books, the first and foremost step is to enable the taxes. I'll show you how you can do that. So under the settings, go to the taxes. Under the taxes and compliance section, you will have this enable tax option. So you can click on it, and once done, your organization will be tax enabled here. So in Zoho Books, we do support 5 types of tax returns. So these are all the list of tax returns which are supported. And so we will see how you can configure the tax returns in Zoho Books now. So once you go to the settings and taxes, so here you just have to, just a minute, go to settings taxes. Here I have configured the GST HST taxes. So while configuring the other ones, you can click on configure, and you can choose the tax agency under which you would like to track this tax. And also you can choose the reporting period and the tax basis in this section. So it can be accrual as well as it can be it can be a cash based tax returns. So this is how you will be configuring the tax returns. And now we will see how the tax automation works and how it is linked with the tax return configuration that you have done here. So basically, what is a tax automation? So Zoho Books makes tax management seamless with the tax automation feature. So once it is set up, it automatically applies the correct tax rates to your transactions. So eliminating the need for manual entry. So this is especially useful for businesses operating in multiple locations, as Zoho Books ensures the right tax rates are applied based on the location. So with this automation, you can save time, reduce errors, and stay compliant with the Canadian tax regulations effortlessly. So to automate this process, we have the tax rules in place. So we will now see what is the default tax rule. So under the advanced tax automation, we have this tax rules. You can go there, and here you can find the default tax rule. So for each province, you will be able to see a tax rate that is associated already. So in Zoho Books, the tax rules will be created based on the configuration of the tax return settings which you've done in the previous step. So initially, the default tax rules will be configured taking into account the GST HST tax rate that is applicable for all provinces in Canada. So however, once you configure the tax returns applicable for your business, the default tax rule will be automatically reconfigured taking into account the location of the newly configured tax returns. So we will now see the difference in the default tax rule based on the configuration. So in this organization, I have only configured the GST HST returns. So under the default tax rule, you will be only seeing the federal component associated with each and every province. But when it comes to the organization where all the tax returns are configured, you can go to the tax rules and click on the default rate. You will be able to see both the federal and provincial component included here. So this is completely automatic. So based on the configuration, the system will dynamically change the tax rules, the default tax rule. So this is how the tax rules will be created. And now we will see how these tax rules comes into play while creating the transactions in Zoho Books. So for example, we will see how the tax automation works when it comes to creating the transactions in Zoho Books. So for example, I'll take a customer here. So this customer has a shipping address. Here it is British Columbia, The province is selected as British Columbia. So when I create an invoice for this customer, as you can see, the BCPST, the taxes for the British Columbia, is automatically selected here. So based on the shipping address of the customer, here you have the shipping address at the top. So based on the shipping address, the system will automatically fetch the tax rates in the line item table. So I'll show you how it works when the shipping address is different. So here you can go there. And, so when you change the state and save it, you can see the tax rate is getting automatically changed. So this is how the default tax rate works. And it is completely based on the shipping address when it comes to the sales transaction. So what if you have not provided the shipping address? The second thing, the system will consider the billing address of the customer. I'll show you an example here. So for this customer, we don't have the shipping address, and so the billing address is Manitoba. And when I create a new invoice for this customer, you will be able to see the Manitoba tax rates getting automatically populated. So this is how the first thing the system will consider the shipping address. If the shipping address is not present, it will consider the billing address. In some cases, what if you don't have both the shipping address and the billing address? So here under the settings organization, I have provided my location as British Columbia. So the system will automatically consider the organization address. So I'll select this contact where the billing address and the shipping address is not present. So when I create a new invoice, you can see the British Columbia taxes is automatically populated here. So if you want to choose a different tax rate for this customer or any customers, we have provided the freedom to click on the tax rate and you can select the tax rate from the list. Okay, till now we saw how we can configure the tax returns and how the tax is configured comes into play with the tax automation while creating the invoices. Now we will see how you can generate the tax returns after you create the transactions. So this tax automation works similar when you create the purchase transactions also. So for example, for this particular vendor, if I'm creating any bill with the tax automation in the purchase side, it will consider the organization address as the base part. So when you create a bill, the organization address will be considered, and the as I shown you earlier, so the organization address is British Columbia. The system will automatically consider the tax rate that is applicable to the British Columbia region. So after you create the transactions, the next step would be to generate the tax returns. So once you have configured the tax returns under the settings taxes, you will be able to see a module, the tax returns module created in the dashboard section. So as you see here, I have the list of configured tax returns and I'll show you how the report looks like. So I can go here. So I'll just click on this generate GST HST return, and the system will automatically generate a report, and it is completely based on the sales and purchase transactions which you have created by associating the tax rates. So once the report is generated, you will be able to see the values here, and all the values are hyperlinked. You can click on it and it will take you to your report, and you will be able to see what are all the transactions that are involved to bring that particular value. And at the top of the report, you will be able to see some of the important details like the tax period, and you will be able to see the tax basis. So the GST HST tax returns report in Canada consists of several key lines, each representing specific components of your tax reporting. So for example, this line 101, this represents your total taxable sales, including goods and services sold within Canada. So the line 11106, it shows the input tax credits. So the businesses can claim the GST, HST paid on some of the eligible expenses as ITCs to reduce their tax liability. Likewise, this line 110 shows the installment payments that you have recorded. Any payments are made in advance or credits carried forward are applied here. So at the bottom of the report, the system will automatically calculate the tax payable. So based on the transactions. So if you are eligible for a refund, you will be able to see the reclaimable amount in line 114. So when you will be eligible for a refund. So if you have paid more taxes during the purchases and you have collected less taxes during the sales, you will be eligible for the refund. So that will be calculated based on the purchases and sales which you have recorded, and it will be shown in the line 114. So also with the other report, you can see the net tax payable at the end of the report. It will be tracked in the line 115. So sometimes you may need to record a transaction for a previous tax period in Zoho Books, but the return for that period has already been filed. In such cases, you don't have to worry. Zoho Books allows you to include these transactions in your next return. So if you haven't filed your returns yet, you will be able to see this particular checkbox, include previous periods, unfiled transactions. You can simply check this box and confirm your selection in the pop-up. And once these transactions are and once you have selected that, and the unfiled transactions from the previous period will be included in this current filing. So this ensures that your tax reports remain accurate and no transactions are missed, so helping you to stay compliant with your tax obligations. So we also have the tax adjustments. So the return allows you to record the adjustments in the corresponding lines of your tax report. You can record the adjustments by clicking on adjust against a line and filling out the fields. You can just click on it. You can enter all these information and click on adjust, and it will adjust the net tax payable based on the adjustments which are posted. So once you are done with this, and if you are sure about the values that is shown in the report, you can go ahead and click this mark as filed button, and you can choose the date of filing. Once you click on OK, the returns will be marked as filed in Zoho Books. After marking the returns as filed, you will be recording the payment you have made to the government. So for that, we have this tax payments module. You can go there, and you will see the list of tax payments that are due for the payments. So if you are eligible for the refund for a particular tax return, you can record the claim that you have done by just clicking on record claim option. So under the payments history section, you will be able to see the list of payments that you have recorded. So we have another special feature in Zoho Books that we have which we have introduced recently, which is combined tax returns. So if you are a Zoho Books user in Quebec and you file both GST, HST, and QST separately, there is a more efficient way to manage your tax returns. So in Zoho Books, you have the option to generate and file them as a combined tax return. So to enable this, you have to just go to the tax return section. Go to taxes, go to tax returns. You can edit the Quebec sales tax, and you can enable the combined GST, HST, QST returns. So once you enable this, you'll be able to see this combined returns under the tax returns module. So here you can click on generate GST, HST return, and once you're done, you will be listed with both the GST, HST, and QST returns in a single report. So you will be able to find out the total net tax payable at the end of the report. So after this, the process is same. So you can click on mark as filed, and you can record the payment to the which you have made to the government. So you might be wondering how the tax payable is calculated in Zoho Books. So for that, we have two separate accounts, the output tax account and the input tax account. So under the output tax account, the amount of money that is charged as taxes on your sales will be tracked. And under the input tax account, the amount of money charged to you as taxes on your purchases will be tracked. So based on the difference between these two accounts, the final tax payable amount will be calculated. So what happens when you just mark the returns as filed? The system will post a manual journal entry automatically to transfer the difference between the input and output tax account to the tax payable account. So it will look like this. You can come over here, and as you can see, the difference between the output and input tax is credited to the tax payable account. So this process is completely automated, so you don't need to create any journal entries manually. So this ensures accuracy in your tax records and keeps your financials up to date without any extra effort. So we will now see how you can handle the meals and entertainment expense in Zoho Books. So today I'll be walking you through some of the special cases, and we'll now see how you can handle this in Zoho Books. In certain provinces of Canada, so businesses can claim 50% of the meals and entertainment expenses incurred for the business purposes. So you can also handle this by using the tax group feature that is available in Zoho Books. In this case, only 50% of a tax rate that is associated at the transaction level can be claimed. So we can split the tax rate into exactly two halves, and one should be tax VAT enabled and other one should be non-VAT tax. So the VAT enabled taxes can be reclaimed afterwards. So once these rates are created, you can create a group by combining these two tax rates, and while creating the expenses, you can associate the tax group, and you will be able to reclaim the 50% of the tax rate which you have associated. So we will see how we can handle that. Under the settings, taxes, under the tax rates, you can create the tax rate by clicking on the new tax. And I have already created, and so this is one of the tax rate which is non-VAT tax. So for example, if the total tax rate is 10%, you have to split that into exactly two equal halves. So one should be 5% and another should be 5%, and one of them should be non-VAT tax. So I've created two tax rates here, and so once I create a tax rate, I'll just go to I'll click on this drop down and click on this new tax group and select both the tax rate which I have created, and I will create a tax group like this. And once you have created a tax group, and when you create the expenses, you can associate the tax group. So I will choose the account under which I will be tracking this expense. When I'm selecting the tax, I'll be choosing the tax group which I created. Choose a paid through account, and when I create an expense, you will be able to see the total tax amount here, which is $10. So when you see the journal, you will be able to see the tax paid expense getting debited. $5 of this tax amount will be moved to tax paid expense, and another $5, which is reclaimable one, will be tracked under the input tax account. So this is how you will be handling the meals and entertainment expense, where you can claim 50% of the taxes which you associate. So we will also see about the vendor slips which you can generate in Zoho Books. We'll first see why these vendor slips are important, and so who will be eligible for these vendor slips. Okay. So we have two types of vendor slips. One is T4A and another one is T5018. So we'll first see the T4A vendor slip. So these slips are issued to report payments made to the individuals such as contractors, freelancers, or self-employed professionals. So if you're making payments for services, commissions, or other professional fees, you are required to issue a T4A slip in Canada. So this ensures that the income is properly reported to the CRA, helping the recipients file their income tax returns accurately. So we'll now see how you can generate it. So in the tax slip, you can choose the type of tax slip. You can choose the filing year. And once done, you will be listed with all the boxes. So you can map the account with each and every box listed here. And once you save it, you will be able to proceed with generating the vendor slips. So as you can see here, these are all the vendors that are qualified and tracked vendors. To first generate the vendor slips, you have to track the type of purchases for at the vendor level. So for this particular vendor, when I create a vendor, I'll be choosing the payment tracking for this reporting purpose. So I'll select this type of slip here, and when I'm generating the slip, I'll be able to see this particular vendor will be added here. So this is completely based on the threshold which we have in Zoho Books. The threshold would be like for T4A, it is $500 of sales tax paid during the purchase from the vendor, and it is inclusive of taxes. But when it comes to the T5018 slip, it is same $500, but it is exclusive of taxes. So as you can see, the sales tax paid here, it should be above $500. It should be on or above $500. So all the qualified and tracked vendors will be shown in this column, and under the tracked and unqualified vendors, you'll be seeing the vendors that are tracked, but they are unqualified because the sales tax threshold is not met for them, and that particular vendor will be listed here, and you will be able to see all the non-tracked vendors under this particular list. And once you are sure, you can just click on next, and here you will be able to see the information about that particular vendor. And once you click on save and generate, the T4A slip will be generated like this. So you can select the slip and you can export it from Zoho Books. And so once you export it, you can upload that to the CRA portal. And once you file the returns there, you can just come over here and mark the T4A as mark as filed. The same applies to the T5018. So when I click on generate slip, I can choose the type of slip here. So the boxes will be listed like this, and I can map the accounts, save it, and when I go to the next step, I'll be able to see the list of vendors that are qualified for the T5018 slip. So the process is same. You'll be seeing the vendor name and other information here. And once you click on save and generate, you can export the slip that is generated. So with this, we are coming to the end of today's webinar, and thank you all for joining and staying engaged throughout the session. And I appreciate your time as we explore the various aspects of handling taxes and special cases in Zoho Books. And I hope the session provided valuable insights to help you streamline your tax management process. So if you have any questions or need further clarification on anything we discussed, so please feel free to post your questions in the chat or Q&A section, and we'll be reviewing them and addressing your queries shortly. So thanks again, and I look forward to connecting with you all soon.
Thank you, Narayana, for sharing your insights and walking us through how Zoho Books simplifies sales tax complaints for businesses in Canada. And of course, a huge thanks to all our lovely attendees today. We have some questions that are coming up. We will be taking them up in chat one by one. We hope you found this session valuable, and the recording of this webinar also will be shared with all of you over email sometime next week, probably. So keep an eye on your inbox for the recording of this webinar. And if you have any questions, drop an email to our support handle at support.ca@zohobooks.com. Thanks again for being here, and we'll look forward to seeing you in our future webinars. Have a great day.